Welcome back to the Finance Corner. So, this will be, I think, episode 10 in our series of flipping money slowly with the options wheel. So, here is where we currently are. If you could just pull out the year to date, we're actually on paper, we're down slightly. We started the year, we started off this account 2,500, 7,500, and then we're currently down 7,100 because of the shares positions that we have. But we actually are up. I'll try to find the screenshot of my actual P&L because for some reason you actually can't see it on the desktop version of Robinhood. But I actually been collected, well, compared to this month's, the premiums collected this month or the premiums lost this month, I think it puts me around like $1,000 we collected in premium. And it was around like 12.58, but then we did a loss. We took a loss on a put credit spread. So I actually learned about spreads in the last time that I did this video or did the video for this series, and I'm gonna looking forward to implementing some spreads going forward. But it's really cool actually learning how the spreads work because the right now the strategy I'm using is called the wheel strategy. So you sell a put, you collect the premium. If it gets assigned, now you hold shares, but it's all good because you have shares that hopefully you did it on a stock that you don't mind owning. So, we got assigned shares of Kohl's, and I actually really like SMR. I also really like Kohl's, but I went ahead and bought some shares or sold some puts on SMR, sold some puts on Kohl's, and that's how we ended up with these shares. And then combine that with the premiums that we've been making, and we're currently down though. So if you can see, SMR is really what's dragging the portfolio down. I think my average cost is around like 1037 or 1087. Yeah, so we're actually, you can see we're down roughly 1,000 on paper, and then on Coles we're also down, and then we also have a put credit spread on SMR. I'll talk about that. But just real quick to show the accounts that also on Kohl's, we're basically break even. Um, I managed to lower my cost basis. So it says it's $20.05, but really from the like premiums and stuff that I've been collecting, my real adjusted cost basis is around like $17.70 or 17.80, something like that. I have it marked off in Trading View. And so yeah, we're currently up on Kohl's, which our average cost is 17.20. So I could kind of to take profit on this, but there's some things going on this month in August. So today's August 16th, Sunday, and we actually have Kohl's earnings. I think on August, the end of the month, like August 26th, and it's a big earnings because it's like it's supposed to be when they are expected to. All right, we have it right here. It's supposed to be when they're expected to turn profitable. So if you can look at the last earnings, you can see we are actually negative, reported negative zero point 0.3, the estimate negative 1.191. So it beat expectations, but this, as you can see, that the earnings estimate is supposed to be profitable versus here when it's not profitable. And I don't know. I think how we can probably capture some appreciation if it decides to get a nice little pump. My original target was I wanted to hit $25, and then I'll be able to. If it hits 25, I'm not even gonna sell calls or anything. I'm just gonna sell the shares flat out, and then capture that profit. So, yeah, my cost basis, adjusted cost basis from premiums, was down to like 17.75 roughly. If we can actually get to my 2020 or my $25 target, I'd be looking at a gain of about 40%. Can't complain with that at all. So I kind of like where we're at now. Um, yeah, I guess let's talk about Coles. My plans with Coles, and then we'll talk about my plans with SMR, and then go over a little bit of what I did in terms of collecting premium and the loss I took. So real quick with Coles though, I remember saying this area was a nice little zone that we can bounce off of. Why? because this is underneath this low from March 18th, which represents the liquidity zone. And you know it's a liquidity zone because as soon as price actually dropped down into that area, it immediately came higher. So this is the daily chart. So immediately it came higher, bounced out of that zone. It's like we only came down to take out these lows and get those people's stop losses and stuff triggered. And now it gave it room to run. So if you actually see from, I wish we got a sign this low because then I wouldn't mind like a 68% gain. That'd be pretty cool to like let go. But initially we got a sign like what early January, so it was like somewhere up here, and then we just had to endure. I just had to endure this whole. Where is it? It was like early January around here. I think my cost basis was $20, right? So it had to be yeah early January around here. I've been holding calls for 8 months now. 8 months. We're gonna get to endure all of this. So we're finally getting back to our cost basis, or just above it. Since I was writing calls and stuff, I was able to lower my cost basis down here, and we're sitting in the current profit. But I don't feel like taking complete profit just yet. And I also don't plan on, since this earnings is around the corner. Um, I want to see if we can get some accelerated premium. But I wanted, I have a price target, and I just wanted to get a little bit closer to the target because, as you already know, around earnings times is when volatility is a little bit more spiked. So if I'm an option seller, you want to be selling into volatility because then you'll get paid for it. So I might write a short dated call for like a week, but before the earnings ends, so like expiring on the 21st, and then I might write another one for the next week out, and then collect some premium for that. But it's really all dependent on like anytime I'm writing above my cost basis, like I really can't lose. But for me, it's about trying to maximize the potential profit. It's about trying to maximize potential profit because again, we can sell shares right now, write calls right now, but it's not exactly where I would like to take profit. We're only up about 8%, you know, 8% 8%, but eh, I don't mind holding through earnings. And then depending on how depreciation is, I might just collect dividends for the third quarter and lower my cost basis even more because Kohl's does pay a dividend. But another thesis I had was basically I'm bullish throughout the summertime, and I wanted to see how Q3 earnings is going to play out. So yeah, next week is very important for me, or the next 2 weeks are very important for me for Kohl's. So definitely gonna be paying attention to that. I want to say if we get to my price target, I'm probably just gonna sell shares and just be done. But if not, we'll continue writing some calls. But I'm definitely done writing puts on calls. Definitely done writing puts. So back to here. I mean that's pretty much calls and the goal with it. Let's talk about some SMR. Let's talk about SMR. So as you can see on this account, we're currently down around 1,000, which I don't even know what percent. What percentage is that down? 13%. All good. But basically, what we had been doing a lot was selling selling calls and selling not selling calls, but we've been selling a lot of puts on New Scale here. And I think the last update we had 400 shares, but I actually got assigned more shares. So I think let's actually try to find the history. Uh, actually try to find the history of that because it shows how I think it was around it was like 200 where is it 200 shares and then 100 shares. SMR put assignment, there we go, right here we got assigned 3 contracts. Oh no, so it was basically another 300 shares. I thought it was two contracts and then another one contract. But so you see, we sold this $10 put here, and then I think that is the one that got assigned. Um, yeah, because the history shows every single transaction. Yeah. So basically, we got assigned at the cost basis of 904, and that brought us down to the cost basis that we're at. And now we're here. We're sitting, and I guess we'll talk about briefly Cole's earnings, and then I'll talk about not Cole's SMR's earnings, and then I'll talk about this GME contract the put credit spread we decided to do. But let's talk about SMR real quick. So this, if you don't know, so SMR is basically a nuclear energy company that's building, small modular reactors to be able to kind of power these data centers and other commercial energy uses. It's going to be using nuclear. So basically, that's the essential business model. And right now, it's very, very, very early stage. It's very, very much so pre-revenue, right? So a lot of the things, or one of the things that's going on that is a major catalyst for the stock is they have a project going on, I think, in Romania that they're currently, because they have um, a design that's approved from the NRC, the Nuclear Regulatory Council. They have a design that's approved for use, commercial use, and now that project that's ongoing, we that's a very important project basically for the stock because um, any ongoing developments is going to be a good news for the stock because that's really what the stock is trading based off. Whether this idea can be brought to reality. So the fact that that's happening means it's going to take some time, and that's also why SMR has been very, very, very volatile recently. And just going forward, it's an extremely volatile stock, but it has potential. It has so much potential, like so much potential. But that's one of the things that's going on right now. I think there's basically some regulatory hurdles that the project is running into right now. Last research I did, basically they couldn't start construction yet because there's some more funding and stuff. It's like $3 billion they need to actually go ahead and get this project going. So, but everything is still in the works, and they didn't really start construction yet on their in their product over there. But that's kind of where we're at on the fundamental side. Now, looking at the technical chart, let's take a quick look at the weekly chart. Like I kind of like this. I kind of like this. So you can see this like a clear, very clear trend line that's been downtrending lately. But this is why I kind of don't mind owning shares around this area, is because the potential is just huge. The potential is just genuinely huge. Um, you know, the timeline for when we can actually get these SMRs going is like 5 years out. So they don't have like 2030 is like the set date they're going to be actually able to monetize these things. So it's going to take a very long time to get this thing going. So in the meantime, I'm kind of okay with just playing the volatility. Like I said, any good news that happens with the project is going to be a catalyst that sends the stock higher. So there's so much potential for it. But one of the things I wanted to point out is how I believe that we may have, and this is my opinion, this is solely my opinion, but I think that we're close to a bottom. I think we're close to a bottom, and this is only based off the fact that the price action this is what's telling me that right now. So basically, if we zoom back a little bit to the daily chart, we've been trending down like crazy. We found a little support or like a kind of like a pivot area, and this is a support area for a very long time, around April 10th, this year. So basically, we made this low resistance low here. Candle came down, spiked back up, and we've seen a nice, huge, respectful rally to the upside. gained about like 60%. But now, ever since here, because I did a lot of options plays in this area, and basically I was paying attention to a couple different things. One thing I liked is the fact that we have this zone here, and it came down and it respected it. The idea that I had was that we're going to come down here into the zone and then easily bounce out. But that is not at all what we did. So we came down to the zone, breached this high to the T. And I think this is important to mark out because this is how, when it comes to reading a chart, you want to pay attention to all the highs and the lows, the swing highs, swing lows, and you want to pay attention to like liquidity sweeps. So basically, when the price came back in to fill this imbalance here, you see how we actually came up. And this is permission to like rally. I thought we were going to continue like the uptrend past this point. But no, what we actually did was to the T. We swept this liquidity. We swept the 1420 zone on this 1 day here, June 2nd, and then immediately dumped and crashed. So now compare where it's at now. So you can see just the swings in this stock. It's down 34% from that high. So, you know, there's so many swings in this stock. But anyways, basically, I think here's another thing we should point out since we're doing some nice technical analysis. I had the low here. And the reason why we were talking about this area is I think this low is very important. And it stood as like a bottom and a support, and it stood like that for a very long time. The fact that now we came and then we breached this low gave us permission that we were going to continue going to the downside, but immediately we didn't go much lower than that. You can see we actually found a support area around here. You can see we found a support area. Let me get rid of this. Around between 720 and 770. We like this. We like this because if like the way that you read this, market breaches this low, this is signaling bearish territory. And then we retrace a little bit and you would expect to continue going to the downside, especially since we didn't break this high here. But I remember calling out on Twitter. I'm like, I like $8 as a whole number. And basically, we've seen the price kind of respect that area. So this was very important to me. We had gotten assigned all the way up here, so we were down like maybe like 40% at the bottom here. It's not a good time. But basically, I marked off this zone because I'm like, okay, down close into a bullish send here with these three candles going higher. I'm like, all right, maybe we can this can be a bottom. When this happened, and I marked off this zone. More importantly, I marked off the gap here. That was really what I was marking off. But the fact that we have a down close candle in that area is confluence that this area is important. So the fact that we came up, came back down, and notice something very important here. Notice how we had that is support. This, because if we were to continue to the downside, right, you wouldn't expect the lows to be doing that. You'd expect the low to come somewhere lower, right? Like you would expect the low, if we were to continue actually trending down, you would see that the low come here, up here, and then we make a new low down here. That's confirming a downtrend. But the fact that the market is now showing signs of strength means I kind of called the bottom here. I was just like, oh, maybe $8 is the support level. So here, now that we're still behind underneath my cost basis, I've been kind of sitting on my hands the past couple weeks, but I want to get back into. I don't mind since we do have some buying power. I don't mind selling another put to kind of lower my cost basis, but I don't. I like the $9 support. I don't think that Reef should go below $9. So depending on how this week goes and how premiums are looking, I might sell another put, try to collect some more premiums. But regardless, again, if we get just collect the premium, or if even if we get assigned more shares, it's like I don't mind owning all the shares in this area, especially if I'm right and this is to be a bottom. So that's kind of where we're at. So you see how the reason why again this is important, we got a change in character. We got a shift, market structure shift to the upside because it was trending down, trending down. We have these equal lows here. Price actually breached those equal lows here, and now it's hovering and consolidating in this area. So we love that. This means that we need to be a little bit more patient if we want to see some more upside. And I'll just kind of take it from there. I'll just kind of take it from there. And that's where we're at on SMR. Oh, real quick, their earnings. So it says how it's green. This is pretty funny. So they only made $75,000 for the whole quarter. Um, yeah, it's pretty funny because it's like a $3 billion company, and like you only made 75K in that quarter. Like really? But no, basically there was a. This is another lesson how like earnings, like it's just a small little piece of the puzzle. Um, like it missed revenue by 99%, but it still went higher, right? Like earnings came out August 5th, this date here, but it didn't even like the market is not worried about this at all. This is how you know that the market is really just trading on how well does that project go. It is not trading on the financials of this company. It doesn't care about its balance sheet, its assets, its liabilities. Right now, it doesn't really care about it. Um, it mostly cares about how if we can actually execute this project. So that's kind of where we're at. Just I'm just going based off my technicals. I believe that $8 is a nice support level, and yeah, I'm bullish from here. Moving on, going back to the account real quick. Let me just talk about how. So we learned how spreads work. You know, there's put debit spread, there's put credit spreads, put debit spreads, and then call credit spreads and call debit spreads. But basically, I did a put credit spread on GME, and I kind of did it just to test it out. So let me show you my theory real quick. Um, Basically, one of the news that came out with GameStop was that like I forget the actual headline. It was like it spent. It basically did something that like diluted shareholders, and that's what led to this huge gap here. So if you look at the time that I actually put in this trade, it was on August 4th. So you can see August 4th. I did it the day after it dropped, like that. And so basically, my idea was um, this is kind of just gonna be a a nice move out of here. Basically, like we dump and we had the nice sell off, but I've seen it plenty of times before where basically the market just does that and then immediately comes back up. That's kind of what I was hoping for, and then I was completely wrong. I was completely wrong because basically, you know, if the I have to look into the actual headline. I don't have it in front of me, but you know, share dilution is a real thing. Um, it's not actually when you dilute shares, you're essentially um, all existing shareholders kind of they own less equity in the company, right? And that's what it means to dilute shares. So it's like when they came out with that headline, it really wasn't a good thing, and like this is like a healthy reaction. Basically, all that to say, I shouldn't have put on this trade thinking that it was going to be a quick V-shaped reversal because the headline is actually a worrisome headline. Like share dilution is actually something you need to worry about. It's not like there was another I can't think of an example right now, but it's not like you know another false headline, a false flag headline that basically is trying to scare investors and then you know price reacts very fastly. It was actually do to actually like sell off like this. So long story short, what happened with the options? Let's look into it. So we opened up the put credit spread. I think it was like 8 contracts we did. Yeah. So basically, when you open up a credit spread, you sell a out of the money put, and then you also buy an out of the money put, but you sell the out of the money put higher than you would buy the out of the money put. So basically, and then the difference between the strikes is the width of the spread. Because the idea is you enter the spread on the same. They're supposed to be for the same expiration date. So you know you sold the $20.05 put on 8/14, and then I bought a $19.5 put on 8/14. So basically, I think at the time, and then we can see price at the time because we entered on the 8/4. You could easily see at the time price was like close to. It was still out of the money, but it was close to the money. It was like at 19 ish, 1950, 1920. So basically, the idea of a spread when you do this. So let's look at a quick learning lesson real quick. So you can see how we sold this put, and then we got paid $1.57. We got paid $1.57, but we also had to buy this put. And so now the reason why you buy this put is so that this kind of covers your loss. So the whole goal with this the credit spread is you want the options, both of them, to expire out of the money, right? So that way, if I got paid $1.57 for this, and I spent 92 cents on that, that means that plus 0.92. Sorry, 157 minus 0.92. My net credit is 65 cents. And then again, you multiply this by 8 contracts. So 65 cents times 8 contracts is 5.2 times 100, which is why we got paid 520 right here. And basically the goal is that you want GME to expire above $20.05, because that way you get to keep the premium, and this was only for the loss on the downside. But here's what actually happened for me. That was the most ideal scenario. What actually happened is I ended up taking the max loss. So, and then we opened up a SMR for credit spread as well. But yeah, and basically that's another thing about the spreads. It gives you an exact amount of profit that you're going to make, and it gives you an exact amount of loss you're going to make if the trade doesn't work out. But this thing can get a little bit confusing and annoying because since it's a two-legged strategy, you can actually get assigned on one leg, which is pretty much what happened to me. So basically, we sold, the $20.05 put, and we sold 8 contracts. So what does that mean? We had to buy 800 shares of GameStop at $20.05. That cost us $16,400. Amazing, amazing. But it's okay because it's like if your broker, this is why Robinhood is pretty cool. If your broker allows you to get on a naked option, and then I got assigned 16,400, and I only have $7,000 in my account. Yeah, don't sign up for a broker that lets you do that. But the reason why I was able to do that is because I had the put side to minimize my loss. So remember, the put gives you the right to sell at the strike price. So even though GameStop was below $19.05, see, it actually was at $18.58. So when I had to buy these shares, and now I have 800 shares, I have them at this cost basis, right? I have them at this cost basis minus the premium that we got paid from the spread. Basically, without going too much into the math, even though I'm pretty much explaining it anyway, we get to, since we're taking a loss, we have to buy it at the higher price, but it's currently at the lower price. But it's better for me to exercise the contract than for me to sell the shares. Because if I sold the shares, that would have lost like an extra $1,000. That would have been an extra $1,000 loss. And this is why the spread has a max risk and a max profit kind of tailored out for you. So basically, when I got to sell, when I got to sell the shares, it sold it at, so basically the math is very simple. It's 16,400 minus the 15,600, and that's a loss of $800. But we actually got paid, remember, we got paid 520. So when you subtract out 800 minus the 520 we got paid, our loss was only $280. So that is basically spreads in a nutshell. I mean, there's that's specifically a put credit spread what I did. There's other spreads out there. We'll go into it, but basically that is the GME put credit spread that didn't work out, and kind of upset about it, but it's all good. The next spread we opened up was SMR, and this is the same idea, right? Same idea. So this one actually expired a week later than the GameStop. So, but the idea is the same. So we sold 10 contracts at 230. So 230. Sold the 10 contracts. So this, remember, this is what we collected. We collected 230 times 10, and then we had to minimize our loss. We bought the SMR put $11 at 10 contracts at 150. So basically you do 230 minus the 150, and that's why that gives you 0.8 times 100. That's why we got paid a net of 800 to open up this spread. So what has to happen is, I think our expiration date is the 21st, so the end of this week. Basically, in an ideal world, SMR has to expire above, I think it's $12. I'm not gonna lie, this is a very ambitious trade. This is a very ambitious trade. But the reason why I was like, and I'm not really gonna do these spreads much very often either, because I'm realizing that, like, with the wheel strategy, you have a lot more flexibility. Like, you can hold shares and you can be down on shares and hold it, but you're not actually down. It's just a paper loss. When you're doing spreads, you are in fact locking in the loss or locking in the profit as soon as the options expire. So this is another situation where I'm either going to lose, I think it's like max loss is 200, but the max profit is 800. So that's another reason why I was willing to go into this bet, is because, like, it's a 1-to-4 risk reward ratio. If I'm actually right and SMR does actually catch a nice bid and spikes up, it gives a nice spike above $12 by Friday. Yeah, that'd be $800 in profit that we didn't make. Like, I'll take that. I'll take that. I know that's kind of where we're at. That is kind of where we're at. So let me go back here, show you again. So we got the put credit spread for SMR, currently down on it. If this thing does go into profit, I might just close it early. And if I can get a nice, even like a nice $200, recuperate the loss from GameStop, like 200, 300, that'd be great. That'd be great. I think you actually might be able to see it here, estimated returns. So yeah, max loss is 200. So if price stays exactly where it's at by the expiration date, max loss is $200. But if I'm right, hold on. Okay, whatever. If I'm right, let's say it gets to $12. Hold on. Can I not? Oh, this is so weird to use. Okay, just have to click it. All right. Basically, but yeah, as you can see, if so at 1120, I think is my break-even price. So if SMR actually goes up to 1120, so you can see everything is based on the options. Like, this is the options curve. So if tomorrow, Monday, it actually spikes like crazy, um, then we'd be able to take profit. Say it gets to 1120, we'll be able to close with 130, and I think I do that. And then, but if we, so you can see, anytime anything above 1120, it starts to really go into the profit here. And so if we get past the $12, we can actually maximize our profit and get the whole $800. But it has to reach above $12 by the end of this week. So I'm not gonna lie, it's kind of asking for a like just to put everything into context here. I'm quite literally asking for a 28% gain. I'm asking for a 28% gain in a week. So it's like realistically, probably not gonna happen. But this stock is extremely volatile. So you can't count it out completely. But regardless, if it does go up a little bit, I'll be able to close that spread and profit, and I'll be happy with that. But yeah, as you can see, we're doing a lot of plays on SMR. We're doing a lot of plays on SMRs because it's a company I researched very well. Um, I'm pretty comfortable with it. Um, Pretty comfortable with the volatility on it. Um, yeah, so that's where we're at on the puts. That's where we're at on the spread, and that's where we're at on the account overall. Just got some stuff on the watch list. I'm ready to start, trimming off coals. I'm ready to start trimming off coals and start playing around with some other stuff. Because there's some other stuff that I want to pay attention to. As you can see, you can basically see the stuff I want to look into on my watch list here. So we got USAR, MP. Nokia is actually very interesting play. And then everything else like AI plays. But yeah, that's kind of where we're at. And catch you guys in the next update. Thanks for watching and peace.